Welcome back, everybody, to On the Fly, a Financial Literacy Institute podcast. Today, Zach and I are joined by Nick Zubek and Greg White from Enclave Investment Group. Guys, how are we doing today? And can you tell us a little bit about yourselves and Enclave?
Yeah. I'll take point and Greg can go after.
Absolutely.
I'm doing pretty good. My name's Nick, of course. I went to Akron, so I was in sales and marketing major. I switched from engineering about 2.5 years in. Currently working in tech sales up in Cleveland. And yeah, excited to be on the podcast, excited to talk about Enclave and kind of just personal finance in general, the idea of investing and making your money work for you.
And I'm Greg. I also go to the University of Akron. I started in finance and then switched gears to data analytics with my focus of finance. And I'm currently in finance at a manufacturing company in Cleveland. And yeah, just really passionate about investments, investing, and entrepreneurship and stuff like that.
Awesome, guys. Awesome. And kind of a little backstory, I guess. So I met Nick probably, what would you say, it's 2, 3 years ago in an entrepreneurship class with Professor Gopal, and he was really focusing on, the product side of entrepreneurship, and it kind of opened my eyes, and it was pushed through in engineering, and Nick can attest to this, and Zach can as well, that at least engineering at Akron is focused on product development and more so manufacturing. But I think all of us have found ourselves in the entrepreneurship realm of services more so than products. So I guess if Nick, if you and Greg could give us kind of a background of EIG, how it was started, why it was started, and what you guys are into right now.
Yeah, so I'll go into how it started. I read a book about midway through 2020 about personal finance and investments and stuff like that, how to manage your money well. And the author went into starting like how to start an investment club, giving like his personal anecdotal example of his. And I kind of read that part and really ran with it. I went to a good friend of the two of ours and talked to him about the idea, and the two of us hopped on it. And after about 6 months of research and filings and stuff like that, we started Enclave Investment Group in late 2020, and then by February 2021 we were making our first investments as a group of I think we were at 6 people when we launched, I want to say. um, and it's just been a really good experience since. Nick, I'll let you.
Yeah, so we started as Enclave. I think 2/16/21 is when we first made our investments. That's when we first put money into the TD Ameritrade account and first bought our first, I guess, equities. Um, just recently in May 27th, I think, of this year,
May 28th,
we
26th.
yeah, 26 is when
Yeah.
we placed the orders, but we ordered two vending machines. A friend of ours, his dad actually, long story short, they were looking for new vending machines. So we jumped on the opportunity. We saw it as a good return on your money. It beat the dividend yields you could get from the stock market. And it genuinely isn't too much work. It's just a couple hours a day. But so we have two vending machines. We do have a third one in storage. We're looking for a location to put that in. Um, and yeah, speaking to the service side of entrepreneurship, they weren't happy with the current vendor. It must have been COVID related. I think they mentioned
Yeah.
they couldn't find help to stock them. And it was also a little further out of their normal routes. So we were able to take over and just provide better service for them. It's been going pretty well ever since. And then, yeah, the stock market's not doing too hot this year. I think we were off to the worst 6 months in stock market history to start 2022. But we are performing better than the market. Granted, it's hard to make money in a market like this, but yeah. I guess I just want to add for Enclave, the idea is essentially just combining our money to gain access to bigger and better and I guess higher return investments. So the idea is we can accelerate into things like real estate quicker. The vending machines, we have the capital, essentially the partners to raise capital when we want to buy things like the vending machines. And yeah, it's been great. Everyone that is a member of Enclave is kind of an equal partner. It's a dollar for dollar equity split, and it's been going pretty well.
A good way to think about the investment part of the business is like on your own, you might invest, let's say, like $50 a month into your own portfolio. This is an opportunity for you to bring, 10, 15, 20 people into a group and throw in $50, $100, whatever amount you decide on as a group. But you just, you hear the idea of the compound effect of investing by like a snowball. And this is just, cranking that up a few notches, and you really start to see that effect manifest a lot sooner, in my opinion.
That's very cool. Yeah, I agree with that. When you have a lot more people involved, a little more discussion going on, and obviously when you have a lot more people involved, you can get a lot more capital involved. So the vending machines are a very cool first service to get into. Do you guys stock those yourselves? Elaborate a little bit on that. Are you hiring someone to do that for you? Are you doing those yourself? What's up with that?
Yeah, so the venom business has very slim margins, so we're
Right.
stocking them ourselves. But honestly, now that we're in the flow, it's only about 2 hours a week, and then maybe an hour for Sam's Club trips or Amazon order and things like that. But yeah, we stock them ourselves. It's pretty cool. They have the card readers nowadays, the company we use. You're able to see live real-time inventory any time of the day you want. You can see real-time sales, everything like that. So it's pretty much every Friday or Thursday, we'll check what we need to put in them, load up the bins, drive up there, stock them, collect the cash, and then as far as the cards go, it's just direct deposited. So it's pretty, especially now that we're in the flow of things and we know kind of the order size for what we want to do and where to get things. It's become almost automatic, even though it's still us going out there and stocking them.
So along with the stocking, how long did it take you guys to optimize that process of figuring out how much you need, when you need to go, or did the computer system kind of do that for you?
I'd say like we're still kind of in the process of figuring out the ideal like amount of inventory to buy ahead of time. We've only been stocking this since like the end of May. So like full month wise, just June, July, and August now. So definitely like now we'll be able to start making really good informed decisions on, how much of what product we need to buy versus, what can we kind of like wait to sell a little bit more of before buying more. But I think it's also one of those things that's probably going to be forever changing, though. I mean, obviously you'll have staple snacks like, the generic candy bars and, chips and stuff like that. But like we have some other like interesting things like different Pop Tarts.
We have gum. The gum actually sells decently well, which I wasn't
Yeah.
expecting, like packs of gum. But yeah, I'd say the majority of what's left to optimize is just figuring out when to order and how much to order to keep a lean inventory. Because obviously with especially the snacks, they can go bad. And that ends up being, if they do go bad, you can write them off your taxes at the end of the year. But the idea is we don't want them to go bad. We want to just be able to go through the inventory before it goes bad and keep lean inventory and keep that capital essentially just in the bank. And then when we have excess, putting it back into the central fund. But
That is very cool. That's a really good way to get into kind of passive income, which is a lot of this is a big goal for a lot of, different financial investors. One way or the other, we're trying to make money, with our money, make our money work for us, whether that's throwing it in the stock market, in real estate, or even vending machines. Now, what ballpark, what is a vending machine cost? I have absolutely no idea.
so we went through
$3,000?
if you count the card readers. So we went through, there's actually a place in Akron called A&A Vending. I recommend them. Obviously, I shout them out. They've been great to us. But they sell refurbished machines. I think we got ours for the drink machine was 2,000, snack one was 2,100. They both came with, I think it's a 6-month warranty.
Yeah.
Granted, that might change depending on when you order and what they're doing at the time, but it was about 4,100 for the machines themselves, and I think the card readers are about 360 each. Plus, obviously with the vending machines, you gotta move them. So it was about $500 for delivery since it was going to the same location for both of them. And they just handled it. They came, installed them, taught us how to use them and things like that. But
And then after inventory, I think like initial inventory was about 500. I want to say
maybe
just
pushing
about.
7. Wow.
But like it also includes stuff like containers to transport like your products, storage, like which double as storage containers, cleaning supplies, stuff like that.
I'd say probably 7 grand total is what we spent to start, including like the LLC fee. We have a little cart to carry it when the bin's heavy. We have a cart to roll into the factory and whatnot. So
Okay.
probably about 7 grand total is all in out the door what we spent.
Okay. Yeah, that's not terrible at all. Would you say so with the cartridges and everything, do they charge you a monthly kind of service fee for that? Or does
Yeah, so
that come off of each transaction?
there's a fee per transaction. I think about
It's 5%, 6%
it's like yeah, 5 or 6% per
of card
of card
transactions.
transactions. So cash is they don't take a cut of anything cash, but if it's a
Yeah.
card, they take 5 or 6%, and then it's like there's like a monthly flat fee. I think at like $5. I want to
I
say.
think it's 10 per machine because we
10
just
per
got the
machine.
invoice yesterday.
So $20 total for the two machines. But like I feel like that's definitely worth it for the convenience of because like these card readers take like Apple Pay, Samsung Pay,
Okay.
obviously a generic credit card, debit card. So for like to have I think the flexibility and ease of access, it's worth it to spend a little bit of money to get it.
Yeah,
And the
and
real-time
people
inventory.
and people have really kind of stopped carrying cash too. So I guarantee you make your money up for it more than if you didn't have it type of thing.
Mhm.
So
Yeah.
real quick, I kind of want to pivot away from the vending machines real quick to like how you have Enclave set up. So you mentioned you have EIG products, which is the vending machine. Now, your main, I guess, EIG group, is that, I guess, legal entity wise, how is that structured? And since you're an equity fund, is there anything you have to do with registration with the SEC or anything like that?
So, basically the way that the holding company Enclave Investment Group is set up is a multi-member LLC. So every member is you own the amount of equity that you've put into the company dollar for dollar. So like let's say that the total asset value of the fund in general or of the company in general is 20,000 and you've invested 10,000, you would own 50% of Enclave Investment Group and its subsidiaries. So in that case, it ties into the vending machine company. Um, and essentially each member owns the percentage that they've put into the club. As far as regulations go, because it is an investment club and it's a private membership, fortunately, we don't have any like regulations on that front with this, the SEC and things like that. I do know like if you work for a publicly traded company, you have to disclose that to like that company's like compliance department. And I think it probably depends on the company, like how strict they are, but I'm pretty sure on a like flat basis, you're not like allowed to have your club invest in securities that a member of the club works for. So like if a member of the club worked for Apple, we wouldn't be able to invest in Apple. I'm pretty sure that's like industry standard. And then I know that, depending on the company you're with, the rules change a little bit more.
I gotcha. So
Yeah,
it
so
probably keeps insider trading out of
Mhm.
the picture.
Yep.
yeah, and the way we're structured with the 1-for-1 equity, I think is primarily that's probably the biggest thing that separates us from being something like a mutual fund, where someone else you collect other people's money and then essentially manage it for them and take a payout ratio to make money from that. So I don't think we've never taken money out of the central fund. We have taken money out of Enclave for things like the logo and the filing fee. And then we actually invested some of Enclave's money into the vending machines, as well as raising capital from our partners. But we don't take like expense ratios. The dividends aren't paid out. So one that helps the snowball get bigger and bigger. I don't know if you ever looked at a chart of how compound and dividends work. If you reinvest the dividends instead of taking those out, But yeah, the idea is we just keep everything in there, and even EIG products, all of that money goes back, back into essentially the central fund in Enclave, and just trying to get that thing bigger and bigger and bigger. So when we're 40 or 50, we all have a nice little retirement fund in there, essentially.
That's very cool. So you said you guys started with 6 members. How many are you up to now?
Right now we're up to 9. We're private, but we're always kind of like in the mindset of, if someone reaches out to us, and expresses interest, we're always gonna, entertain that conversation. Um, but yeah, nine people right now.
Very cool.
Yeah,
So
it's a
sorry,
weird mix
go ahead, Nick.
between obviously you want to grow, you want to have more partners, you want to have more dues coming in, and therefore snowball gets bigger and bigger. But we also want people who are contributing members, and people who are there for that 20-year journey, because the idea is we're not gonna pay out for 20 years. We're not gonna take money out of it. So we want people who are in for the long haul. We want people who contribute to the club, who bring ideas, have discussions,
Mhm.
and really, I guess, want to be involved. It's not, and we're just not ending up managing people's money and stuff like that.
Right, exactly. So you guys mentioned, right, that just kind of the industry-wide standard. If someone works for a certain company, the investment group really can't invest in that. Have you thought about this scenario where someone wants to join and invest, but they're working for a company that you're very heavily invested in already or plan to be, and you'd have to be like, sorry, probably not an option for us,
I'm
unfortunately.
trying to think of what we
It
own.
seems like there's a little like backstory to this question here, Zach.
Well, I was gonna say, it's something that I've thought about in the past, just like kind of thinking to myself, like, um, just like, oh crap, like, what if like someone we talk to is, working at a company we're heavily invested in.
Mhm.
um I thought, but I haven't thought of a good solution. I mean, I guess it'd be one of those things where it's like you have to just look at, the cost benefit between a member and the company they work for. um
Right.
I definitely think it'd be an interesting thing to tell the group, like, hey, we found someone we really want to add on to the club, but we also have to sell like all of our shares in, like, I don't know.
Luckily, there's thousands, maybe 10,000 companies out there that are publicly traded. And I mean, on any given day, on any given year, there's probably a few hundred that are actually viable investments that will pay off over the next 5, 10 years. So we haven't run into it yet. I don't know if we want to disclose exactly what we're invested in, but there is one of our friends works for a company that we're invested in. So yeah, we kind of already have ran into that, but
Mhm.
I guess just as it comes up, we'll evaluate, and of course, the partners in the group will make a decision based on it. But
Okay. So what I'm getting from how you've explained Enclave is it's not kind of a set it and forget it, park your money and let the group take care of it. You want equal buy-in from everyone that's involved, and you kind of want this to promote people making their own investment decisions. Is that correct?
Absolutely.
yeah, we all have our own personal portfolios. I know specifically, I think for me, Enclave, if you look at my ownership of Enclave, it's probably less, maybe 5 to 10, if not less than 5% of my personal, I guess, portfolio. Um, so I look at it kind of as just my spare change that I throw in there, but it's also that spare change that you're not taking any money out. I'm not using it to buy a house in 2 years or anything like that. It's just going to stay there. So the idea is everyone contributes to make that grow. And then in 20, 30 years, it's a pretty sizable chunk of money.
Yeah, I think that's a good plan because people our age, you have to get over like the instant gratification type of mindset
Yeah.
because you know that retirement's like a long game. You're not going to throw money in the stock market and then 3 weeks later pull it out and say, "Oh my God, I made $10,000. Let's go spend it," because that defeats the whole purpose of investing. Then you have to worry about capital gains taxes, and that's a whole road that you don't want to go down. I mean, I would say myself, I'm guilty of it once, and that was Dogecoin, just because I wasn't sure of the viability of Dogecoin as a long-term asset. So when it got high, I dumped a bunch of my money out of it and I paid taxes, but it was worth it because now it's like 5 cents. So I think your goal with Enclave is to invest in high quality assets that are going to be around for a long time. So you don't have to worry about, say, stock A tanking in 3 weeks and you losing all your money, because it almost makes investing safer than just picking stocks on your own. Number one, because you have a group who you can bounce ideas off of and kind of like reassure your thoughts, but also because it's not just your money that's in the fund.
Well, and that's like sort of the dual purpose of the group, right? It's meant to be definitely like an investment club and collaborative thinking and everything like that. But, we have a bunch of people in the group that are not, um in finance heavy, finance, economic, accounting roles. Like we have someone who's a teacher, someone who's a police officer, a real estate agent,
A professional author.
a professional author, like,
Yeah.
diverse people. So like that's sort of the beauty of it. Is like even when like in their own portfolios, they might, have an idea or wanna, ask the group like, hey, like I'm looking at this, like, what do you guys think about it? What do you see? And again, you have the people who are a lot like me and Nick who, really, really enjoy looking into this stuff, providing a certain type of analysis. But then you have, someone else saying, well, yeah, I mean, I've heard this thing about them, this thing about them, and it's just, all adds to just a collaborative environment, and one that, I think promotes education as well.
Yeah, it's kind of funny because if you look at, so one of our members, Kevin, if you look at his portfolio, he's very dividend focused. So his portfolio looks completely different from Enclave's, looks completely different from my personal portfolio. I look more for like the small mid cap companies, but a few of them we line up on, and then those get proposed to the group. The group thinks it's a good decision, and then the group holds that as well. So there's few that line up, but for the most part, even Colin, I mean, I live with him. We talk about stocks every day. We have pretty different portfolios. Um, and again, it goes back to Enclave's a small piece of my overall portfolio. It's a small piece of Greg's. It's a small piece of Colin's. It's at the end of the day, it's kind of just diversifying it across. And yeah.
And I think the cool thing too about how both Enclave and FLI align is that goal of having a group of people together that you can use, say one person is an expert in this type of field, another person is very strong in this type of field. It gives you a variety of people to bounce things off of. And it doesn't necessarily have to be stock related either, because I'm sure you have people in the group that are strong in maybe some area that's not monetary, or some area that's more like personal or may like emotional stuff like that. Like you have a group of people that you can bounce this stuff off of. Now, one more question, because I know Zach has one. He's waiting to ask. Say somebody proposes a investment and no one in the group likes it. Can that person still buy it themselves in the fund, or is it just vetoed?
So the way that the voting works currently right now is based on the amount of your percentage of ownership. So you can, it's dollar for dollar, but like if someone comes in and throws, puts $300 down for a month and everyone else puts 50 down, that person gets a little more equity
Well, I
that
will
month.
add, so it's your cumulative equity, but
That too.
so when we vote, the largest shareholder has more say in the vote than the smallest shareholder. Um, that's how we're structured right now. We have been talking about maybe restructuring that a little bit, but um, yeah, I mean, ideas get shot down all the time. I spend probably 2 hours a day looking at the market, and there's a lot of stocks I buy that people in the group don't want to buy, and so I just buy in my personal portfolio. And so I mean, it's all about not taking it personally. That's kind of like you guys said, the benefit of Enclave is you have kind of like checks and balances where if 5 people in the group don't want to buy, we don't buy. You know what I mean? And it helps limit the risk. I think is the biggest advantage of it is you have to have more so a consensus opinion to buy something. And hopefully the idea is over time we pick the right things more often than not, and you're gonna have some losers, but the idea is you have more winners and losers over 20 years, say. But
And
Gotcha.
I would say that
Very
that's
cool.
like why our performance this year has been the way it has been, is that we're able to be really, really picky because we need, you have to have a lot of people come to a consensus, which is not an easy feat.
Right. Definitely. So you're kind of diversifying your portfolio there, just by voting, and you have a bunch of different investments that the members have suggested and then accepted, right? And you've invested into them.
Yep.
What other, I guess, sources of income are you guys looking to uh, get into in the future, right? So you guys are right now in the kind of the investment group, and you've moved into the vending machine group. Is there anything else that you're into right now or looking to get into in the future?
You take that one.
Not in the near future.
Mhm.
Of course, real estate is. I mean, personally, I bought this house that we're in right now in Akron.
Mhm.
Big fan of real estate, and I think obviously it's one of the best inflation hedges out there. Um, we've discussed, because like we mentioned, Kevin is an author, so we've discussed maybe making like a personal finance book for kids, tailored towards kids to teach them, because I think you guys can agree with this, and it's probably the idea behind FLI, but the public education system is criminally underserving the financial education of the youth of America. I mean, I personally, I think I had one history teacher who taught us the idea of putting money in an account and over time it could buy you a car. That's about it. That's all I learned, and
Mhm.
all the way through even college, and I was a business major. So, um, yeah, we've been talking about maybe making a kids book. I think down the road it'd be cool to do like a scholarship fund, maybe like a small endowment for business students of Akron. If we could give a finance student maybe $500 as a scholarship, I think that'd be really cool down the road. Um, but right now we're just focused on the vending machines. Right now is, I mean, a pretty good time to get into the stock market. I think as everything's recessed, there's a lot of good deals that are popping up finally after this recent bubble. But yeah, real estate, maybe getting into kids' books. Really, it's just where the group takes us. And honestly, the members that we have, those different expertise, we can play to them. But
I would say the like big one, like eyes on the horizon sort of idea, is definitely to get into like private equity and like kind of consulting on that level. But that's granted very far down the horizon. But I'd say like that's like sort of an end goal.
yeah,
Yeah.
more so being that Holden's company and owning 10% of someone else's car washing business and we put up the capital for it, things like that. I think would be pretty cool down the road because Enclave, the idea is to make that snowball grow. And the passive income is a big part of that. So if you're owning a piece of someone's company and they're the operator, you kind of get more of a passive return from there. But
Very
You're
cool. Those
you're
are
speaking you're speaking my language there too.
yeah, exactly.
Absolutely. And
yeah,
I see this as a perfect segue to kind of get into both of your beginnings in terms of your financial education. And it's probably what Zach's smiling because he was
Exactly.
gonna
I
ask
was
the
I was
same
trying to get at
question.
that too. Yep.
But I guess what was your light bulb moment? And that's a question we like to ask everybody. But like when did it kind of click that I need to get serious about my financial education?
I'm thinking.
That's tough.
Um,
For me,
it
it was
was. I want to say it was honestly it was the stimulus checks. I was fortunate to receive a few of them. I got because I was in school at the time, so I got the ones as a student, and then I also got the general public ones. And I was like, I've X amount of money. Instead of spending this on vacations, instead of spending this on partying, going to bars, um, I ended up actually I invested. I did pretty well because of the stock market at the time. It was a very bull market, and most of those funds that I started with bought me this house. Um, so yeah, I think it was the stimulus checks and just realizing because to be completely honest, I don't really come from a background of money, so I never had that much money at one time, and I was like, you can either be smart with it or you can spend it, and that was a light bulb moment. That's when I kind of started digging into stocks, learning about personal finance and things like that. I'll let you go.
I was gonna say for me it was like my foray into investing was the COVID crash. I kind of like I saw everything kind of starting to get like really really bad toward the end of February, and I just like like when I was younger I remember seeing The Big Short, so like and I guess you could call it a Big Short moment, where like you see what you think is writing on the wall, but like no one else sees it yet, so um I bought a few puts on the S&P 500 back in early March, And then from there, I just kind of like used that money. I was like I like did well. So then I was like, well, let's be smart about this. So then I figured out how to be smart with it. And then that's like what got me into like the personal investing side, and then the personal finance side. And then that's where I found the author of that book that then led into the investment club idea. So um, yeah, I would say that that was sort of the light bulb moment for me.
I love it. And both of those stories are beautiful. And the biggest takeaway from that is that you haven't been doing this for 10, 15 years. Like this is all very recent. And this is a common theme of the guests we have on here is that their light bulb moment was really in the last like couple years. And a lot of people have said it was around COVID, stimulus checks, the mini crash we had then. And I guarantee you, like the kind of whether you want to call it a crash or not that we're going through right now, this is going to birth more financially educated people because they're going to see this as an opportunity to grow their knowledge and then starting getting into different types of investments. So I think, at least for our listeners, if there's one thing you take away from this episode and really all of our episodes, is that you don't have to be an expert in this for like years. You can kind of pick this up quickly and then like they say, build the parachute on the way down and figure out things as you go. To get a little technical though, can you explain to the viewers and myself, honestly, what a call and a put is?
Yeah. So it's exciting. We just got and I want to start by saying this isn't financial advice, of course. We're not recommending any of this. We're not. It's just purely for education purposes. But in
Gotta get the
simplest
disclaimer in.
terms, covered calls I think are one of the better opportunities in the stock market because so essentially with stocks, I mean, the majority of people and the common opinion is to hold them for a long time because you're buying a piece of a company, that company is going to grow. The price will fluctuate. It'll go down, it'll go up, it'll crash some years, it'll go sky high some years. But you're buying a piece of that company and you're owning, just like a private equity. If we gave someone $5,000 to start a car wash business, you're giving a company X amount of money to be a shareholder of them. The covered call essentially rewards you for that. So for a covered call, it's 100 shares. All options are 100 shares at a time.
Yep.
If you have 100 shares of a company, you can write a covered call for X amount of days out in advance. You pick a strike price. So say if a stock was at $50 now, you pick a strike price of $100 and call it 180 days. Someone buys the right from you. They pay you for the right for them to buy that stock at that price. And you have to, if at any point from when you issue the call to when that call comes up and when that strike date comes, if it breaks that strike price, they have the option to execute it. But so if the stock goes from 50 to 150 and your strike price is 100, they're going to want to buy that from you because they make that $50 difference. They get that stock at 100 and they can sell it right away for 150. But you keep the premium and you also keep that appreciation. So you bought the shares for 500, you sell them for 100. So if they do execute the option, you make that $50 profit per share, plus you keep the premium that you got at the beginning. If it doesn't, you keep your shares and you keep the premium. So you're holding the stock. If you're going to hold the stock for 20 years, theoretically, you can get 3 or 4 options a year premiums. It's essentially, I gotta be careful here in the financial advice again, but you're almost making a dividend out of a company that doesn't pay a dividend, or with covered calls you collect the dividend while you hold the shares, so you can get a dividend and the premiums 3 or 4 times a year. We just recently got into, I won't name the stock, but we just recently got into it with a stock that's fairly cheap per share. And we're looking at, I mean, you're looking at pretty decent returns over the year. Granted, of course, everything comes with risk, nothing's guaranteed. But yeah, so that's a covered call. The covered put is in that situation, if a stock's at 100 and you want to buy it at 50, you can put up, in this case, 50 would be $5,000 for 100 shares. You essentially give it to TD Ameritrade or your broker. They hold that money. You get a premium while you wait. And if it drops to 50, they can execute to sell you it for 50. But if it drops to 20, you still have to buy them for 50. So a covered
Nick,
put.
quick question here. Sorry.
Yeah,
So
yeah.
the terminology here. So when you buy the right, or maybe correct me if I'm using the wrong terminology
Yeah,
here. You're buying the
reserve
right to
is probably a better
sell
option. Yeah.
is the call.
No,
A call is
the right to buy is a call. The
Right.
right to sell is the put.
Oh, okay. Right.
And after Nick finishes with the covered ones, I'll go into the naked ones, and
Okay.
that's sort of like the other side of like options buying and selling.
So
Okay.
yeah, covered, you can think of covered as they're objectively safer options because you put up the money to buy the shares, or you put up the money to buy the shares.
Mm-hmm.
So you put I'm getting all confused here, but the covered call, so the covered part implies that you put the money up and you know either what you're going to sell it for or what you're going to buy it for if it does get executed. You know, you set those parameters yourself. And with the naked, Greg can cover the naked part. That's where you really get into the risky stuff, and that's where you hear about shorting and hedge funds going bankrupt, is when they short companies and they get squeezed. It's a whole thing. But if the covered part implies that you put the money up and you set the parameters.
So,
Okay. And Greg, real quick before you
yeah.
get into the naked part. So if I'm understanding this right, a put, if I could like draw a tangent to real estate, is like say you agree on a rent to own situation with the tenant, they're gonna buy this house 2 years down the road. You state your sell price based on what you think it's going to appreciate at that time. In the event that it appreciates more, you still have to sell it at your agreed upon price because that's what you agreed on in your documentation.
And the premium you can think of as the rent you get while you wait.
Yep.
Okay.
That's the covered call, though.
That's the covered call.
A put
Yeah.
would be more so. I'm trying to think of the real estate terms. If a market, hypothetically, if a market was tanking and you think a market is going to be going down over time, you say, hey, I'll buy your house from you for 50K. If it goes down to 30K within this time window, if it breaks under 50K, you reserve the right to sell me the house for 50, no matter if it goes down to 30 or if it goes down to 20. They reserve that right to sell it to you. And you still get, I don't know how the rent plays into that analogy, but you, in the covered calls and covered puts, you keep the premiums,
Okay.
which is the really attractive part of it, because with the shares you own, you can generate passive income from it. So if you already have 1,000 shares of a company, you can make a premium 10 times a premium on those 1,000 shares because it's 100 shares per option.
So Nick just kind of went into the call, like the option side of writing the option. So that's kind of being like the market maker. You're going to the market and saying, hey, I have these options to sell. The buying side of that equation is basically the people who are doing like naked calls and puts, which are where you basically say you can say like, okay, I think the S&P 500 is gonna, I think it's gonna be um $3,500 per share by January 15th, 2023. So then you can go to your brokerage and you can, go to their options, sort through it, and you can go to there's the bid and the ask. So the bid is the sell side, the ask is the buy side. So like you'll go like ask for, SPX $3,500 contract expiring January 15th. So what that does is basically now you enter into a contract to have the right to buy 100 shares of SPX at 3,500 per share. Or what you can do, and you pay a premium. So what you pay to have that like right is the premium that gets paid to Nick, the market maker, in the covered put or covered call example. So they collect the premium and it's, you're done with it from there. What a lot of people do then is they'll buy the option at a theoretically low price, wait for the trend to confirm their thesis. So if they think, if they buy a put for a stock that, that is below the current price of the stock, they're expecting the price to go down. What that does is it drives the premium up because it becomes more likely that that will happen. So what they then do is they sell that option. And then again, theoretically at a higher premium than what they bought it for. And that's, another good way to look at like something like that, like especially with the put, is like a hedge or like insurance. So, if like just for any, pretty decently sized portfolio, I'd say it's smart to, probably put 10% of that toward a hedge of
Careful
some
with the
sort.
smart.
Yeah, sorry.
You can.
You can.
Not
Not
financial advice.
not
I want to
advice.
be very clear.
But anyway, you could, put 10% of your portfolio towards, an put option on the market in general, and that just could protect you from downside loss.
And I just
Um,
want to add, so you can tell, I mean, I personally have a few months now of writing cover calls, looking into cover calls for different stocks, looking at the premium options, strikes, things like that. So I put a lot of time into this, and you can tell we're still trying to understand a little bit of it.
like they're very
It's
difficult,
options
very
in general are way riskier than just holding equities. I will say the cover call side of it, we have a lot more experience with. That's the only thing. I personally don't do puts. I personally don't do naked options.
that's like what I exclusively do.
Yeah, I like the cover calls because it's if you have the shares and you're okay with the company dropping 20% because you believe in the company, there's really no downside to a cover call because if you're okay with the stock dropping, if you sell it at a premium, as long as it's above your cost basis, you control if you make money or not. And you pick the strike price whether it's above your cost basis or not. Um, there's always risk in investing, but the cover calls that we've put a lot of time into understanding them, and I personally have a couple. I think they're one of the better options for when you have shares already, then you can utilize those shares to make extra return. It's only like an extra 1 to 3% maybe a year, but that 1 to 3% over 20 years is pretty substantial. But again, option options are a whole different beast than just buying stock equities. So not financial advice, do your own research for sure, put the time into it, learn it. I think one of the biggest things with investing, and this is after reading dozens of books. I just finished Warren Buffett's biography. It's a 37-page audiobook. Every time I put time into learning more, it's one of those things where you realize how much you don't know.
Mhm.
I think that goes for pretty much anything in life. The more you learn about it, the more you realize you don't know.
Yeah.
So yeah, I mean, we're just on the journey of trying to become better investors. I look up talking about Warren Buffett. I mean, the guy's been doing it for 75 years now, or whatever it is.
The
And just trying to learn from them and whatnot. But be very careful with options is kind of the bottom line of that.
you know those like the yellow like dummies guide to fill in the
Yep.
blank. The Dummies Guide to Options. I've read through sections of it. I do recommend that if you or anyone listening wants to learn more. It's a very just to even have that like knowledge because options definitely do move the market. Um, it's just because it's just the nature of how they work. So it's definitely like one of those things where like the more you can learn about them, I think just the more of an intelligent investor you are, no matter what. Like you could not touch them a day in your life, but knowing about them, I think is definitely a beneficial thing to any investor.
It's worth noting that all of those hedge funds you see, all of the hedge funds going bankrupt, all of the mutual funds going bankrupt, most of the time it's because they use leveraged options. Most of the time it is shorts, and they weren't careful with the shorts. They borrowed too much money when they're shorting something, and that's when you see them go bankrupt. That can very much happen with your personal portfolio. I don't know if anyone's heard of Wall Street Bets. I don't endorse what you see on there, but you can see the horror stories on Wall Street Bets. Very careful with options. They are a pretty cool thing to get into once you understand them and fully understand the risks associated with them. I will say personally though, I don't mess around with puts, shorts, or naked options in general. I got burned 1 or 2 times when I started, and I mainly stick to the covered calls now just because I'm cool with holding those companies if they go down. But
Yeah,
yeah,
I couldn't have said it better myself. And like they said too, this is not financial advice. Your biggest asset is your own knowledge. So if you're interested in any of this, do your research and put in the time. I would not recommend just going into it blind and hoping it works out because 99% chance it's not going to. But yeah, phenomenal testimony there, guys. Thank you so much. So as we're getting to the end here, we want to go through kind of a few of our usual questions that we ask our guests. So these are the questions for each of you, and it's not necessarily related to Enclave, but more so your personal, your personal life, your personal preferences. So both Nick and Greg, what is your number one goal for the rest of 2022?
Oh, I thought you were gonna say for life.
I thought they were too. I was scared
2022.
for that one.
Dang, we're coming up. We only have what is it? 3 months left.
3 months
Oh,
left.
for 2022.
I think
Right now it's probably to hit. I'm in sales. Anyone who knows sales knows, I guess the stress or the relief that can come with having a quota. So I think hitting my quota, we get paid out a pretty good bonus when we do hit that. And the goal is to use that quota to buy my second property within next summer or so. So I think the number one goal on my mind right now, is to get to that quota, get that 2% kicker that we get, and set myself up to stay on track for a second property next summer.
Awesome. I love it.
I'd say my goal, that's tough. I'd say it's pretty basic, but I'm in my last semester at school here, so I'd say just finishing that up. And then just again building my sort of personal savings, investment account. But I want to buy a house here soon, so I guess just preparing for that.
Awesome. Yep. And the biggest thing too, since you've spoken them into existence, you have to do them. So
Yep.
Manifestation.
both us and the listeners will hold you accountable for it. So next question, if you had to pick one book that's had the biggest impact on your life, what would that book be?
There's a lot of good ones out there. I'm really a big fan of the subtle art of not giving an F. I
100%.
think that book, it just really, it made it obvious. It's such a tongue-in-cheek title, but I think the general idea of it is just knowing what you want in life, where you want to go, and being okay with that not lining up with other people, I think is the biggest idea. So yeah, I would highly recommend that book. It's a quick read. I think it's about a 5-hour audiobook. Just the general message of that idea, I think, of that book is very powerful. And I find myself recommending it to everyone all the time. But yeah, the subtle art of not giving an F. It's the F word, but
It's a nice orange cover, but yeah, that's a
Yeah.
very good book. Absolutely.
Great book. I'd say mine is the book that inspired the investment club, Stop Being Poor. I was trying to remember the author's name. I can't think of him. I found him through Twitter. But it's just a really good book. The points that the author made there, like even like very simple stuff like prepaying all of your utility expenses as early as you can. And then, basically like paying all your expenses that for like are a thing for sure as soon as you can in the year. And then you spend the rest of the year with even that much more disposable income. The author really just kind of preached like treating your like personal finances like you would like a business finances. And I think if you look it up on Amazon, you can find it. Again, Stop Being Poor. But
Does Mark
unfortunately,
Solomon ring a bell?
maybe I think
Okay.
so.
A black cover with the guy on it.
Yeah, that sounds about right.
Okay.
Really quickly, while we're on the topic of books, because I know a lot of people don't know about this, the app, it's called Libby. So like library, but Libby. If you have a library card, you can put that in there. Free audiobooks. You can rent them for 2
Ooh.
weeks.
That's a good deal.
Nice.
Audible, it's a great service, but $15 per audiobook, outrageous. Libby, I've read probably 30 books now, maybe 20 to 30. Found them all on Libby, didn't pay a single dollar for them. The public libraries use them. Libby, and you get a library card. Highly recommend it. It's on probably Android. I know it's on Apple too, but
Libby by Overdrive. Does that sound right?
it's an app.
Yeah,
I don't know.
yeah.
Overdrive might make it. It's my phone's charging.
It's like a red kind of cover type of
Yeah,
thing.
after this, I'll send you like the picture of the app so you know what it
Okay.
is and you can put it in the description and whatnot. But highly
Sweet.
recommend it. And if a
Absolutely.
book's not on there, then you can get it on Audible. But save yourself $15. Use the
100%.
library's ebooks.
Downloading it now.
Yeah, it's that It's like a red cover with a blue book on the bottom.
Okay. Yep. I just downloaded it as well. Yeah, that's awesome. Thank you. All right. And or I guess the second to last question, if you had one piece of advice for yourself 5 to 10 years prior, what would it be?
Buy ETFs. Have my mom set up and buy ETFs, buy some sort of index fund, just save money, because that 5 years. I mean, Warren Buffett started when he was 15.
Mm-hmm.
The earlier the better you can start, and I think that's a big part of why you guys started FLI, is to understand the power of time for things like investing. Um, but yeah, just invest even some of your money when the younger you are, the better. Compounded interest. I forget who it was, but he called it. Was it Albert Einstein that called it the
Yep.
sixth wonder of the world or the eighth wonder of the world?
Eighth
Oh,
wonder.
I think
Pardon my
Absolutely.
ignorance, but yeah, it's crazy. I mean, if you haven't, go into a calculator and just type in some numbers and see the difference between 10 years, 15 years, 20 years at 10% or whatever. It's compound interest is huge. So I definitely have my mom buy me some ETFs, put some of my money into ETFs, some sort of investment that will compound over time, whether it's stocks or what have you.
Honestly, after that, I don't think I could say anything different. I mean, that's at least the easiest one to just be like, yeah, if I could just go back in time, I would do that. I guess to more or less piggyback off of what Nick was saying, a good way to kind of just think about like if like there's anyone, out there, I would say in general, who's potentially on the fence about like investing, like just look at the market where it was 5, 10 years ago and like look at it now today and be like, ask yourself, do you
Well, look at
wish
it
do you
50 years ago.
well, like even five, like even that's the thing though, even five
Yeah.
to 10 years, like if you can look at them and be like, man, I wish I did buy something back then, buy it today. Um, yeah, I think that's just like, especially for just like things that will just pay off, you know, so much, more than you would ever expect in the future. Um, just invest in the market. Go like just Google finance or what is it? Future value calculator. Enter, your starting amount, monthly, period payments, all that, the interest rate, all that stuff, and you'll be able to see like after 25 years of just some very like conservative investing, you can churn, $1,500 a year into 500, 750, a million plus.
Mm-hmm. Like they
I
say,
want to say,
time in the market beats timing the market every single time.
Very
yeah,
true.
just for a quick example, I don't know if you guys have ever seen on YouTube the Money Guy show, but they have a mug. And, and I think the mug says or this $1 mug could have been $88 or something. It's just the idea of, I think they use 20 as the number to start. But that dollar, man, over time, a dollar can be 88 bucks. So it really makes you think different when you're at the bar and you buy a $10 shot or something and you're like, I just spent 800 bucks. But obviously, I mean, people have hobbies. You spend the money, and investing's all about what you're comfortable with, knowing the risk level, knowing where you want to get to and what your goals are. But yeah, just the power of compounded interest. And I for sure tell myself 5 years ago, to even just start educating myself on
Yeah.
investing and to
Mhm.
get into personal finance, to get into learning how to make your money work for you, whether it's stocks, starting a business,
There's a
what
lot
have
more
you.
there's a lot more to personal finance than like balancing a checkbook, which is something that like 10 years ago especially, that's what I thought it was, balancing a checkbook, making sure you have enough money in your bank account. There's like that's why like, what you guys are doing and your sort of vision and mission and everything like that is awesome because just there's so many people out there that don't see, not necessarily don't see the value, but like, just like having that conversation with them, like, hey, you know, you can open a brokerage account for free. There's like no fees associated. And if you threw even 20 bucks a month into it, you'd be amazed at the results.
Yep, we appreciate that, Greg. It means a lot. So last question, where can our listeners find both of you and then Enclave Investment Group on social media or online?
Yeah, so we're not too active on social media. Part of the problem, social media, I think a big aspect of is growth. And as we want partners, we want people in it for 20 years. So the growth strategy behind Enclave is a little weird, but we have a LinkedIn. I post on the LinkedIn sometimes. I'll comment on things in the market. I just made a pretty cool post about Warren Buffett's birthday. So I think it's
Enclave Investment Group.
Enclave Investment Group on LinkedIn. We have the Instagram is Enclave Investment Group. To be honest, it's not too active. I usually just post on the stories when I see something in the news. But yeah.
Awesome, awesome. And Zach, where can the listeners find you?
So I'm at ZON22 at all social media, including LinkedIn. You'll find my headshot there on my LinkedIn if you search my name, Zach Owen, or ZON22. And you can also find me at our website, thefli.net.
Absolutely. Thank you, Zach. And you can find me at Sean Lacey7 on all social media, and then Sean Lacey on LinkedIn. Also, make sure to check out our website, thefli.net. Guys, I appreciate you taking the time to join us today. We covered a lot. I need to do a lot of research and grow my knowledge in stocks and trading. And yeah, I can't wait to have more conversations about this because this is definitely one of my weaker spots in the financial realm. So thank you guys for everything that you shared. It was excellent. I appreciate it. I hope our listeners appreciate as well. Zach, do you have any last words?
Thanks so much, guys, for your time. Yeah, I'm sure we'll talk a little bit more about this tomorrow. Like Sean said, I want to grow my knowledge on kind of the stock market, maybe the options and puts, even if I'm not going to use them. It's something that every good investor should know about. So again,
Yeah.
thanks for your time. Thanks for coming on.
I just wanted to, yeah, thank you guys for having us. Go check out their Instagram, guys. I see, I forget your partner's name, but the TikToks he makes every day, I laugh at them. They're pretty good. And then of course, Sean's detailing business, go give it some love so you can get more customers. But look forward to talk with you guys tomorrow. It's going to be fun.
Absolutely. Thank you so much. And once again, this has been On the Fly, a Financial Literacy Institute podcast. Today we had Nick Zubek and Greg White. We appreciate you guys for listening. Have a great night.